Hello, this is Tara Sholagbadi. What you're about to watch is a video tutorial in which I demonstrate how to carry out three very important calculations that are used as key performance indicators (KPIs) in running a commercial poultry farm business enterprise. The title of the article this presentation is based on is Practical Poultry Farm Business Performance Calculations, a very popular article I wrote in July 2009. Let me get straight to it. In this article, I'm going to share very practical, real-world relevant tips about performance measures you can compute on a daily, weekly, monthly, and at the end of year basis to accurately determine at every stage whether your poultry farm business is operating optimally or not. These performance indices are not aggregate measures. In other words, they are not um, measured in monetary terms. Instead, they have no units because they are ratios, usage rates, and percentages that help to A. Establish a normal trend of a farm's behavior, and B. Quickly identify or detect departures from that trend so that you can take timely and corrective action. I'd like you to note that these measures are tried and tested, that is, these KPIs, and are actually built into a custom spreadsheet software application called the Poultry Farm Manager that I built using Excel Visual Basic in many years ago, 2009 to be specific, for a client uh, who ran at the time a 12,000 layer poultry farm enterprise. But I've evolved it since then. And I've sold it to people, to farm business owners across the continent and outside the African continent. You can quickly and easily compute performance indicators to check your farm's health. That's one thing I want you to know. It will interest you to know that this client actually uh, did not have at that time uh, or was at that time was doing data entry into the software on his laptop, and he would use hand filled copies of a custom record keeping form I designed following a farm visit that involved a review of existing records they had on paper. I designed that custom record keeping form, and it's actually printable from inside the software application itself for the team of the operatives to make entries into on a daily basis. And they will do that and then give it back to him. He made a lot of copies for them to use. Now, he once shared with me how he detected some anomalies in data recorded by the supervisor by using the automatically computed performance indices in the software. So, the point I'm trying to make here is that knowing the performance measures you can calculate to check how well your farm is doing in terms of operations and finances is important, it's crucial. You can do it yourself, as the calculations are actually simple and easy to use. However, when you manage a large or growing farm business enterprise, you may get to a point where it will be more value added if you actually saved yourself the hassle of having to do such calculations or computations manually. Instead, you can automate their computation using a custom software like the Poultry Farm Manager I just mentioned, and spend your time doing intelligent management of your farm business by studying the trends in your performance indices over time so as to take timely uh, and effective decisions that lead to overall profitability. Now, I want to discuss the three very useful poultry farm business performance measures you should know and use regularly that are featured in this article. The first one is the mortality rate, percentage mortality rate. Now, in the course of the laying cycle for a batch of birds on a poultry farm, there will be deaths or losses that occur for a variety of reasons. It could be disease outbreak, it could be fire, it could be predators. What is important is that measures be put in place to prevent a reoccurrence. Then, accurate documentation of such losses needs to be done, with needed stock record adjustments being made. Now, there's no farm that will not have mortalities. However, the farm management needs to keep it to a minimum. You will be able to monitor the mortality rates easily by computing it daily. That way, you can detect any changes, take timely action so that there are no surprises at the end of the month. Incidentally, when you keep track of this index mortality rate, you will find it easier to reconcile otherwise unexpected drops in egg production, because of course if there's a loss of birds, it will impact on the volume of eggs you can get. Now, how do you calculate the mortality rate? Here's an explanation. and I've used actually a demo data from a copy of the software, which you'll be able to see on your screen. Right, to calculate mortality rate, you can see the table there, which is from the demo copy of the software. Excuse me. And what you have is, you can see there that for dead birds, you have the dead and killed, 23 for cage line 1, 9 for cage line 2, 45 for cage line 3 on the 1st of January each. Now you can see the opening and closing stocks. So what you do is you take the value for the number of birds that are dead. Of course, not total losses are different, but number of birds that are dead, and you use that um, to divide, to be divided by the denominator, which is the average um, closing stock value. All right, and that's what you have on the screen there. When you do that, what you get is 0.92%, and that's what becomes your mortality rate. So again, this is something that gets automatically plotted, and you can track it also in the summary reports, and you can look at it over time and see if there's anything to worry about. Generally, you want to keep your mortality rate as low as possible. I think between 1 to 3% at the most. And if you really do it right, you should be able to keep it below 1%. Now, the second KPI you're going to learn how to calculate is the hen day production percentage. Now, properly documented records of mortalities will aid in accurate estimation of your hen day production percentage. And this parameter, this KPI, is computed by looking at the number of eggs produced divided by the total number of laying birds on the farm during the period considered, assuming each bird lays an egg per day, which doesn't happen, by the way. The average duration for laying of eggs is it takes about each bird about 26 hours to lay an egg. So more often than not, you will not have all the birds laying an egg in one day. Now, it is well known that a bird actually takes about 26 hours to lay an egg. Just mentioned that after a preceding one. This is why we do not expect to set a target of 100% hen day production for our flock. It will be reasonable instead to expect that 80 to 90% of the birds will lay an egg each day, so that if our calculations yield results within that range, it will suggest reasonably satisfactory performance. So how do you calculate the hen day percentage? Again, let me explain to you. Now, to calculate the hen day production percentage, again, you take a look at the modified table of values from the demo copy of the Poultry Farm Manager, and you see what I've done there. You have the reflection of the number of the collection of eggs in the morning and the evening on each day. All right, so on the 1st of January, cage line 1, cage line 2, cage line 3, one after the other. So you see there the total collection in crates is 58 crates for cage line 1 on the 1st of January, and 8 pieces of eggs. So the 8 crates need to be converted first of all to pieces of eggs, and then added to the total pieces of eggs for that day, the 8 pieces. If you go to the next screen, you can see that's what's been done here. 58 pieces of egg plus 8 pieces of egg, 58 crates of egg, sorry, plus 8 pieces of eggs gives you 1,748 pieces of eggs in total. And that's what you then divide by the average closing stock that you've derived, all right, the weighted average. And when you do that, what you get then is 70.2% as your hen day production percentage. Again, like I told you, this is something that you measure. This is something that's going to be happening for each cage line on a daily basis, and the software will enable you to see it. And then you look at it, you see the graph that will automatically be plotted, and you'll be able to use that to look at the trend. And when you see any dip, you want to find out why that happened. Now, your hen day production will drop in a manner that is reflective of mortalities recorded or the state of health of your birds, unless you calculate as shown above. Okay, that is the manner in which I've explained to you. Understanding this will help you compare your results with other farms that may not be conscious of this subtle difference. Let me take that again. Your hen day production percentage, all right, will drop in a manner that is reflective of mortalities recorded, unless you calculate it using the method that I've described to you. Because the method I've described to you makes use of a weighted average in terms of the stocks of your flock. So and that enables you to balance out mortalities, because you should not allow your farm to calculate its performance in terms of hen day production based on loss of birds. You cannot measure based on birds that died. So it's important to balance that out so that you get a more representative performance of hen production percentage that you can use to compare with other farms. So um, understanding this will help you compare your results with other farms that may not be conscious of this subtle difference. Note that this calculation method helps you really verify whether or not your birds are getting less productive, because if the birds that it's only the birds that are alive that you can test for performance. If the birds are dead, then you should not measure the performance of the farm based on the birds that are missing because they are no longer alive. Um, so it prevents the losses that occur from making those birds still alive appear to be laying less frequently. Something that can make you start worrying or take otherwise unneeded corrective actions. This is a very important thing to keep in mind. Now, the third calculation that you need to learn how to do is what is called the feeding rate, which is measured in grams per bird. Now, available records from farms and literature all indicate that each laying bird should eat about 100 to 105, maybe 110, 115 grams daily. It depends on the breed and variety of other things, and it may take you time to arrive at that. Now, how do you calculate the feeding rate? I'll explain to you now. Right, to calculate the feeding rate, take a look at what I've done is I've done a kind of a modified version of the data table from the demo of the Poultry Farm Manager. Notice the uh, feed consumption columns. There are two columns. One side of it is showing values of use feed in kilograms: 255, 442 for cage line 2, and 260 for cage line 3. All right, then the automatic computation of the feeding rate is on the right. So grams per bird: 102.47, 110.62, 131.94. You'll agree with me that the third cage line, where you have a feeding rate of 131.98, that's really a lot of waste of food that's happening there. There will be a reason. That's something you want to check. But the the thing is, how do you do the calculation? You do a computation of the total kg of feed for a particular cage line. So if you take the first one, which is what I used in this example, 255 multiplied by 1,000 gives you 255,000, and then you divide it by the average of the opening and closing stock. All right, so if you go to the next screen, you can see there that what we have is 255,000 divided by the average, which is 2,488.5, and that gives you 102.47 grams per bird. That's not bad, that's reasonable. And so you want to see if the birds maintain that over time, weeks, months, and you see if it drops, you try and see how significantly it drops, and you use that as a basis to decide on what's happening. This is something I can discuss in a separate video, but that's how to calculate it. So you can do the calculation for the other two cage lines below the first one. So I use 255 for the first cage line. Look at the other two cage lines, do the calculation by yourself and see how you fare. Now you've looked at the calculation, you've seen how to compute the feeding rate, okay, in grams per bird, units of measure. Now, using the total kilograms converted to grams, all right, fed to your laying birds, to divide the total number of birds managed daily will tell you how well they are feeding, if they are underfeeding or whether or not they are overfeeding, okay, or being overfed. Each condition has its own implications. Underfeeding could lead to poor laying because there could be fat deposition. Overfeeding translates to waste. You're using more food than is necessary. That doesn't make sense. And of course, higher cost of production will result from that, which you definitely want to avoid. If not, it will eat into your profit margins. By calculating your feeding rate for each battery cage or layer pen daily, you can quickly check and confirm if the birds are getting the right amount of food needed. It will also help you to check or to track your balanced stocks of feed and therefore aid planning for new purchases. Now, going forward, here are some important notes you need to keep in mind. First, to achieve a weighted and therefore more realistic result, the formulas outlined above use a derived average of the sum of the opening and closing stocks of the laying birds as the denominator in all the divisions that were done. Like I told you before, that's going to even it out so you don't have your farm being penalized because there were lots of birds, because that's a different thing entirely. All right, you want to see the productivity of the birds that are alive. You can't be using the birds that are dead in that computation. The second thing, and some people don't know this, quite a lot of people have interacted with, they do calculation, they don't reflect this. So this is important. The second thing to keep in mind is if you do not have a reliable paper-based farm data recording system diligently kept by a competent staff on the farm, you will not be able to depend on whatever results you get from computing these performance indices. In other words, if your record keeping is arbitrary and is not regular and is not done with any diligence, then whatever you are punching into the software is not going to be reliable. All right, it will be like it's often said, garbage in, garbage out. All right, so please keep that in mind. And finally, to summarize, a lot of people run poultry farm businesses out here. Many plan to start. A number are hoping to borrow money from banks or friends and relatives to launch theirs. Unfortunately, very few, just like their catfish farming counterparts, have any knowledge of what it takes to intelligently manage the business data analysis aspects of their ventures. A sound knowledge of how to measure the operational performance of your farm business is essential for ensuring long-term success. I mean, it's common sense, but a lot of people just ignore these things. And yet, even to get money from the bank and also to account for money that you've taken from the bank in form of a loan requires that you do this. The three indices I've discussed above can help you in this regard. Learn to use them. But that is just one side to it. You also need to know how to measure the financial performance of your farm business, because this is operational performance now, right? And possibly compare it to other farms or even a generic standard, maybe internationally. There are at least 3 financial performance ratios that can be computed to tell you if your farm business is growing or not. They will tell you if you have done better at the end of this year as against last year or 2 years before. They will also tell those who invest in your business or who plan to or want to how financially strong your farm business is compared to last year. If you are looking to buy a farm business, you will want to know how to compute these 3 ratios to be sure your investment will be worthwhile. Now, please note that the financial ratios I mentioned are not aggregate measures like the income statement, also known as P&L or the profit and loss report, and they're not like the net worth statement or the balance sheet. These are measures that are not unit based, which make them, like those farm operations indices I just discussed above, easy to use for comparison because you don't depend on units, they're actually ratios. Okay, so you can use them to compare farms across board. It doesn't matter what market you are in. You can get a special report detailing how to compute these very powerful farm business financial performance ratios from me. You just have to reach out to me through my phone number 08 plus 234 803 302 1263 or through email tayo@tksola.com. If you have any questions, do let me know. Cheers.